Good morning and welcome to this webinar where we'll show you how Altus Group supports both traditional and DCF valuations in the latest version of Argus Enterprise, which is version 15. My name is James Gray. I'm the global lead for a number of our service provider clients here at Altus Group. It's great to see so many people joining us today. I'm joined by my colleague Nessie Eade, who'll be doing the demo for us later on. Nessie, brief intro.
Thanks, James. Hi, everybody. I'm Nessie Eade, one of the solutions experts or product leads here at Altus. Been with the organization for about 8 years, assisting people like James and the other sales and account managers with demonstrations, workshops, RFPs, various works on our platforms. I'll be presenting the new AE15 platform today with highlighting the running of a TradVal and a DCF model today.
Thanks, Nessie. We also have a special guest joining us today, James McTighe from JLL, who we'll be speaking to shortly. So here's the structure for the webinar. I'll provide a brief overview of Altus Group and some of the key updates. Then James and I will discuss some of the background and trends around the TradVal to DCF topic. After that, Nessie will walk through a live demo of Argus Enterprise version 15. So in terms of housekeeping, this session is pre-recorded. You can submit questions via the chat box on the right-hand side and we'll respond within 24 hours. We'll also be running a few poll questions to get your input. So I'd be very grateful if you could answer those when prompted. Okay, so Altus Group is a leading provider of asset and fund intelligence for commercial real estate. You might know us through Argus Enterprise, which is our focus today, or one of the other applications like Forbury, Estate Master Developer, or our advisory services. What's helpful to understand is that we're bringing these solutions together under a connected platform called Argus Intelligence. For Argus Enterprise end users, nothing changes day to day, but for organizations looking to connect data from valuation, asset management, and other workflows, this unified platform will allow for deeper insights and reporting. We'll send a link after this session if you'd like to learn more about Argus Intelligence, but for now, we'll be focusing on Argus Enterprise, which is a key component of Argus Intelligence. Altus Group is a global business with a strong presence in the Americas, EMEA, and a growing footprint in Asia Pacific. This global reach gives us diverse market insight, which is critical for developing tools like Argus Enterprise that support different asset types and standards. Feedback from EMEA clients, for example, including many of you on the call, has helped shape version 15 and its dual valuation capabilities. So before we go into some of the challenges in the market, I just want to pause there to take our first poll question. So what drives your organization's approach to valuation methodology? Is it client requirements, internal consistency in reporting, investor scrutiny? Is it regulatory or audit pressure? Or is it simplicity or speed of execution? So I'll give everybody a moment just to answer that. Okay, hopefully that's been enough time. So thanks for voting. So in terms of some of the challenges within the market, there's a growing need to support both TradVal and DCF in one model, not just for alignment, but to reduce risk and boost transparency. So separate models create duplicated efforts and inconsistency. So with version 15, we're focused on simplifying the transition and reducing manual work. So what's new in version 15? We'll show you this shortly in the demo, but here are the key updates. So there's more flexible lease assumptions for traditional valuations, side-by-side comparison of DCF and TradVal outputs, and things like day one, yield display, better rounding control, and dual valuation dates. So we'll be demoing this in more depth shortly. Before we move on, I'd like to take our second poll to gauge where your organization is on the valuation methodology spectrum. So please choose from one of the options on the screen. So is your organization at the moment still TradVal only? Is it DCF only? Are you running both separately? Are you able to dual run in the same model? Or are you still exploring? So I'll give you a moment just to answer that. Thanks again for voting. I'd like to properly introduce our guest today. So before we jump in to our discussion, James McTighe is the head of commercial sectors, which is part of the value and risk advisory at JLL, James specializes in office, industrial, and retail. So with extensive experience in valuation, he's advised a wide range of clients from banks and institutions to property companies and investors. He's also been integral in liaising with other valuation firms, helping to shape the development of version 15. So James, thanks very much for joining us today.
Great to be here. Thanks for having me.
No problem at all. So I thought it'd be really interesting for our audience to get some of the industry feedback that you've been involved in. So just as a starting question, can you give us your thoughts on what's driving the debate and the move from traditional valuation methods to DCF? So if you have any background on that, that would be really interesting.
Yeah, I think it's really a combination of factors. We've been using DCF in the UK for a long time, but there's been several changes to the property and valuation industry that's increasing the frequency of use in recent years. We've seen the growth of what is typically called the alternative sectors, such as self-storage, data centers, and build to rent, which, because of the way they are essentially operate, being operational real estate, as opposed to more traditionally leased investment assets, they're nearly always appraised on DCF, as this suits their more complex cash flows.
Yeah, no problem. And so with that, are you seeing a shift from investors in terms of their expectations around valuation reporting?
I think it's currently quite varied. Very much depends on the asset type and the investor nationality. We've seen some clients that expect appraisal on a TradVal basis, and those that want it on DCF, and others that want us to dual run. Reporting on these different bases also varies. Some investors are more prescriptive as to some of the approaches, especially with DCF, to allow them to compare easily across assets, geographies, and asset classes.
So when running a DCF model, how important is it to sense check the output against more traditional valuation metrics like a net initial yield or equivalent yield?
I think it's really useful to do that because people are getting used to DCF more in the UK markets, and that ability to translate one methodology to the other methodology is really helpful. It's also very beneficial with a lot of asset types to use more than one method, because different market participants may look at different criteria across both methods.
Yeah, and what are the main challenges firms face when attempting to dual run, in your opinion?
I think some of the main challenges really are the time that it takes, and the duplication of tasks when we're dual running. So anything that makes that easier is very, very welcome. For investor-led work, for example, we go through a detailed process of draft valuations and review by investors and their auditors, of course. Often during this process, there are changes with assets in terms of leasing transactions, completing other factual changes, and every redraft needs both approaches updating, which for large multi-let properties can be very time-consuming. Yeah,
understood. And with that, presume there are asset types better suited to each method, or there are certain asset types where it just makes no sense to run a full cash flow, so where the traditional valuation method will probably persist for some time. Is that what you would is that your experience?
Yeah, I would say so. I think some asset types favour more calculation by DCF methodology, and others which are more simplistic are always going to be done on the TradVal basis. I think the example we often use is the fish and chip shop. If you buy a fish and chip shop at auction as an investment, you're always going to probably be focused on the TradVal method. If you buy 1,000, you're probably going to look more at a DCF approach.
Yeah, that makes sense. So I'm interested to get your take on how fast the shift between the two methodologies is happening, whether it's a gradual process or whether you're seeing any acceleration.
Yeah, I think it very much depends on the asset type and investor type. Some areas are beginning to move faster because market market participants price using DCF and expect the valuation industry to follow suit. However, other areas are going to take longer as the market is rooted in the traditional valuation approach. Valuers must also always reflect the market. We should appraise as the market does and follow how market participants actually price real estate.
Yeah, James, you've helped shape version 15 by liaising with both Altus Group and bringing the valuation firms and the valuation community together. So can you explain a little bit about your role within that and also why that feedback loop has been so important?
Yeah, sure. When the valuation industry and Altus first got together to discuss the transition, we could see that there were a wide variety of opinions and some frustrations with the AE, principally because dual running was so hard to do at speed on a scale basis, which is what was required as a precursor to a move to DCF for the industry. This dual run step is needed to get the industry comfortable with the changes in approach, but also to allow multiple approaches to be used easily, which is often essential with some assets. We also realised as a valuation house that for yourselves, a lot of voices to listen to, and that if we as valuers coordinated ourselves and told you what we needed, we would stand a better chance of getting what we wanted. The back and forth that we've done with Altus has been so important as an industry to give stakeholders a chance to air their views and hopefully get something that works well for them. Presentation of the KPIs and valuation outputs when dual running was especially important, as were valuation dates and analysis dates, and the to and fro allowed us to get a workable solution for running both methods.
Great stuff. Okay, well, thanks again, James. That's really valuable insight into how the market is evolving and the practical challenges firms are working through. So now that we've explored some of the context, we'll take a look at how version 15 of Argus Enterprise actually supports this shift. Before that, however, let's take our next poll. The next poll is on transition pace. So if you wouldn't mind answering the question that pops up on the screen, how fast is the market transitioning to DCF-based modeling? And how fast do you think? The options are, it's already started, we're moving towards it, it's early stage, or you have no plans because TradVal still dominates. So we'll take a moment for you to answer that poll. Thanks again for voting. And now I'll hand over to my colleague Nessie Eade, who will walk us through the key updates and show you how the platform allows you to dual run DCF and traditional valuation methods side by side. So over to you, Nessie.
Thanks for that, James. Hi, everybody. I'm Nessie, and thank you all for joining this webinar. Argus Enterprise is the industry-leading software solution for commercial property valuation, cash flow forecasting, and asset management. Let's start with a quick overview before we jump into the new features. Version 15 is available only in the cloud. On screen, we can now see the cloud landing page. Any cloud-enabled user can access it via the Argus Cloud portal. The portal will show a user any application they have access to. In this instance, to run Argus Enterprise, or AE, I simply click the red tile, and then when I click launch, a pop-up will appear at the top right of the screen. Once the pop-up appears, I simply click open, and this will complete the launch of Argus Enterprise. The portal uses Citrix Workspace, meaning I can run Argus Enterprise on any desktop or laptop using my login credentials. This environment is already on the latest version of AE. I'm going to temporarily move to another environment just so we can see how we actually upgrade to the latest version. As we can see, I've just moved to a different environment, and anybody with Argus privileges can access the admin space. Within the admin space, I just need to navigate to Argus Enterprise. So I'm going to click Environments, click the environment name, and select Argus Enterprise, and I'll see the calculation version. What you should see here, once the latest version is applied, you'll see a list of the current version you're on and the latest version you can upgrade to. So for any users that need to upgrade, that's how you do it. You can also download and test AE15 in your UAT environment before it goes live on production. For those familiar with Argus Enterprise, much of the interface will look the same, but let's ground ourselves in a few key areas. At the top section of the screen are portfolios. Every single portfolio will have a number of assets, and it will also have a scenario. Scenarios can be unlimited, so each portfolio can have as many scenarios as we like. The easiest way to think of a scenario is a snapshot of a portfolio in time. So if I was running quarterly valuations, for example, I could have each quarter as a scenario of that portfolio. And then this would allow me to easily roll back and roll forward between different versions of a portfolio. At this portfolio level, we can run portfolio level reporting and also run more detailed analysis. But let's enter a property. Here, I have this property with dummy data, and this is what it looks like at a property level. At any point in time in a property, it can be viewed in 3 different views. I'm able to view the inputs only. I'm able to view the outputs only. And as I first started, I can also see a split screen. This functionality is useful because it means that as I'm going through the property, if I want to see any report, I can do so. And AE also calculates in real time, meaning that if I change an input, I'm able to see the effect that that input has on the resultants once I recalculate. Let's hide the outputs for now and just go through the inputs. So you can think of the inputs as sort of worksheets, the same way that you'd have in Excel. The property tab is predominantly around the descriptive data. So we can see things like the name of the property, what type of asset it is, and also the length that I want to run my cash flow. It also consists of things like the location, address. So like I said, for the most part, it's descriptive data. The market tab is where we store and retrieve market data and profiles that will apply elsewhere in the property. So for example, market inflation rates will apply to my market rents. Expense inflation rates will apply to my expenses. The revenues tab is a place to put any property revenue that perhaps doesn't relate directly to tenant income. Examples of this could be car parks, vending machines, advertisement boards, etc. The expenses, this is where we can see all of the property expenses, be it operating expenses or revenue costs, as we may call it in UK. So those costs that will deduct directly from revenue. Capital is for your CapEx. So one-off costs, dilapidations, refurbishments, etc. can all be placed here. The tenants tab is probably the most important section of the property. This is where we'll enter in the bulk, if not all, of the leasing information. As we can see, it's broken down into multiple subsections. We'll cover a few of these. The general is obviously where we enter in the general tenant information, such as the tenant name, the floor areas, the start dates, the expiry dates, and all of those sorts of details. A bit further to the right, we can of course see the rental income. So what the tenant is actually paying as at the date of the valuation. We can also see any increments, steps, rent reviews, etc. And then, of course, a bit further to the right, we can see the market rents or the ERVs. So that's kind of a high level, introduction to the actual asset itself. And we're still going to visit a few more areas. Now, one of the challenges that we've had in the region is previously running a DCF and a TradVal simultaneously. Previously, this required running two separate models for the same asset. This is because some of the inputs and outputs of both valuation methods differ. This meant that a lot of the time, dual running was necessary. So if I wanted to run a TradVal and a DCF on this asset previously, I would have to create two files. This obviously caused issues with version control, consistency, and time saving. AE15 now allows both methods to be used within the same environment. And the first enhancement that we have is within this tenancy schedule, and it's to do with the market leasing and this traditional valuation section. So previously in all versions, we've always had this market leasing section. Market leasing is about your market leasing assumptions, and these are essentially a preset defined set of assumptions that a lease will revert to upon expiry. So here we can see I've created one profile for DCF and then two TradVal profiles. They exist under this market and market leasing tab. There are key calculation differences between renewal assumptions in a DCF and a TradVal. For example, the DCF uses a blended percentage for option renewals, whilst the TradVal renewals are more absolute. You'd normally assume with a TradVal that a tenant either renews or a tenant vacates. If I go back to the tenancy schedule, we'll see under this traditional valuation section, there is a new section which allows a user to use separate renewal assumptions for the TradVal. So I can either opt to use the same as the DCF, or if I want to use one of my TradVal ones, then I would just select that and I can copy and paste it all the way down if I'm using the same profile for all of the tenants. In this particular example, as we saw, my DCF will be calculating off a blend, whilst my TradVal will assume an expiry void. This is the first enhancement that we've done to mitigate this simultaneous running of the TradVal and DCF. Another enhancement that we've done is that we're also now able to see the TradVal and DCF KPIs side by side very easily within a model using the TradVal and DCF dashboard report. As earlier shown, I can show the reports simultaneously, or I can show them exclusively. By clicking show reports, if I know the name of the report I want, I can use this drop-down menu, and the report that we are looking for is the TradVal and DCF dashboard report. At any point in time, I can always click calculate to get the latest updates of the report. And here we can see side by side the TradVal value and also the DCF value. If I bring up more of the report, and I can also use the scroller on the right, I'm able to see all of the key KPIs that I want to see for my TradVal, such as my net initial yield, the reversionary yield, my equivalent yield, and then of course all the value. So the value, the gross value before costs are deducted, the net value, and the actual save value. Same for the DCF. I can see that value there, my NOI yield, discount rate, net NRV yield, and then again, my value, so gross, net, and also that save value, which would be the exit value. We've also added a new KPI that didn't exist in Enterprise before, which is called the day one initial yield. This can be found under this property summary report in this valuation and yield section, and we can see it's right here in this case 3.67. So the key to summarize there, the key thing to highlight here is that we can now easily see that trad val and DCF value side by side. The next enhancement we're going to talk about is that we've added the rounding capability for the DCF also. Previously, Enterprise only showed a rounded value for the traditional valuation. And this is one of the places that I can see that rounded value. I'm under the traditional valuation tab. This is the net value calculated based off of my property assumptions, and this is the rounded say value. To get a rounded say value for the trad val or the DCF, rounding rules must be set up. To see where my rounding rules are, I'll navigate to market and ranges, and I can see that I have this say value rounding rule. And I can see that, for example, on my first limit, that every 100 grand will be rounded to the nearest 100. Once you've created a rounding rule, to actually activate it, click on the modeling policies, and then you can just select it from the drop down. When you activate AE, our templates will usually come with some rounding rules. However, if you wish to amend these amounts, change the amounts, or even create your own, then you can do so under this ranges tab. As aforementioned, it was only in the traditional valuation section before. However, if I go to the valuation and assumptions tab, I can see that we've also done the same for the DCF. So I can see in this case, my DCF value is 17 million. Here is the rounded say value. We've also added this locked feature, which again, this only previously existed within the trad val functionality. What this now means is that I can actually enter in any value I want for reporting purposes. So in essence, you're able to actually override the amount that the DCF is actually calculating. So at this point, my results will show 19.5, but I can still always see the actual DCF value in this field here, and of course, on all of my reports. Finally, we have also added more flexibility with our valuation dates. Previous versions of Enterprise involved auto-sync dates between the DCF and the trad val. I'm now on the property tab, and we can see that my analysis begin date is entered as January 2025. What this would have done in a previous version is automatically default my trad val to the 1st of January 2025. If I go to the traditional valuation tab, we can now see that this links elsewhere to the PV/IRR date. We can override this by simply selecting specified date, and then I'm able to enter any date that I want. The PV/IRR date, to see where this originates, is under this valuation and assumptions tab. Any user who may want to roll a valuation forward, for example, to see property metrics on the trad val at a point in time, can do so. So if I just move this valuation a few months forward, or let's just go with a year forward, I'm now able to see the valuation has updated, but the DCF will still remain as it is. These features hopefully reduce manual work and increase clarity for high volume workflows. That's a quick look at how AE15 supports dual valuation workflows, allowing teams to save time, reduce errors, and improve clarity across reporting. I'll hand back over to James now to wrap us up. Thank you.
Thanks for attending. A big thank you to Nessie for the demo, and to our guest, James McTighe, for sharing his insights. If you'd like to explore version 15 further, please reach out to me, Nessie, or the team at contact-us@altusgroup.com. You'll also receive a link to re-watch this session on demand. Thanks again, and look forward to speaking to you soon.